Hey, it's Emmy back with episode 13 of the 2022 ICT mentorship. On episode 12, the last episode, we were learning how to find bearish order blocks or high probability shorts. This episode I'm really excited to get into because we're going to be learning how to find bullish order blocks or high probability long setups. Before we even get into the video, Michael is stressing the importance of finding reasons to not enter and how it's just as important as finding reasons to enter a trade. Reasons such as high in volatility, his predictions coming to pass, as well as him hitting his goals are enough reasons for him to stay out of the market. Next, Michael is recommending ways for us to prepare for live trading, and that is to aim for 20%. So when we aim for 20%, it's easier for us to be consistent. We also want to be desensitized from the results and plan before we enter the market and not just open up the graphs and think that we can just trade on the spot, and back test as well as forward testing for at least 6 months. This is what he recommends. So now we're going to get into the concept of how he's teaching us to look for bullish order blocks. Step 1, we are looking at the draw on liquidity. We are starting off creating our bias at the higher time frame, at the daily time frame. Because we have a bullish bias that price will trade into the resistance level in the fair value gap, we are looking at that retracement in the orange box as a way for price to aim towards buy-side liquidity. So we are going to expand on that orange box. Step 3, at 12 minutes and 30 seconds, we are looking into that retracement. So Michael says after a run up, we retrace down inside this gap. Michael is drawing our attention to the candle that trades into the fair value gap. So the market starts to rally in yellow, as you can see, and it leaves this down closed candle in the purple rectangle, and he says, I'm going to watch to see if it trades down into that fair value gap at the lower time frame, and if so, we're going to treat this as a bullish order block. We're going to be treating the down closed candle, the purple rectangle, as a bullish order block if at the lower time frame price trades down into it. Step 4, at 17 minutes and 25 seconds, the formula is the imbalance with the down closed candle and the idea that it's going towards buy side liquidity. Step 5, we are looking for the fake move or the ICT Judas swing. We are looking for price to break structure. The rally up is what we anticipate for price to break structure. And then we're looking for price to make a fake move down towards the order block. So next I want to show you how I use this concept and price did break to the higher side. This is what price looked like at the daily chart before I found my setup. But I was aiming for buy side liquidity. So I was going to be searching for the setup at the hourly chart. At the hourly chart, we are looking for a prolonged price swing and a fair value gap that price trades into. At the hourly chart, you can see that green candle trading into that fair value gap, but it doesn't create our order block. As you can see at the 15-minute chart, the initial down closed candle didn't create an imbalance. It didn't create a gap. But eventually, as you can see in the orange box, we had down closed candles trading into the fair value gap. When this happened and it created a gap, that was what we were considering to be an order block, because the formula again is the down closed candle with the gap and the idea that price is aiming towards buy side liquidity. Here is the 3-minute chart, and at the 3-minute chart we are going to be observing the behavior of the candles that trades into what we are considering to be an order block. Price volatility breaks structure and then fakes a down move before it creates a fair value gap for us to enter long. Lastly, I have an example for the euro dollar and how I use the same concept to find this in the charts, and you guys can as well. If I can do it, anyone can do it. So this is how I internalize the draw on liquidity at the daily chart. I see price making a prolonged price swing, which to me is a prolonged price swing at the daily because we don't have a violation of the down close candle. At this point, we have price trading into a fair value gap after we have a prolonged price swing at the daily chart. And when price trades into that fair value gap in the blue rectangle, we are then bullish. And we are considering that orange box to be a prolonged price swing in which we are searching for a price to trade into a fair value gap. So step 2, we are looking for that fair value gap retracement. As you can see in the pink, sorry, I have dogs. Price trades into what we are considering to be a prolonged price swing. And when price trades into that, we are looking for our setups. Step 3, we are looking at the 15-minute chart. Once we have candles trading into the hourly prolonged price swing, we can now use that as a confirmation to look further into the 15-minute chart. And our setup would look like the gap with the down close candle and the idea that it's bullish. In this 15-minute chart, we want to find candles breaking structure as the rally. So when Michael says we want the down close candle and price to rally away from the down close candle, we want to find the rally breaking structure in that darker blue rectangle. The third thing we want to look for at the 15-minute chart is a low with the lower low to the left and the right of it. Step 4, we are observing the behavior of the candles as it reacts to what we consider to be an order block at the smaller time frame. We can confirm that this is an order block by the behavior of the candles. And as Michael says, if we are bullish, we should not find down close candles being violated, and if we are bearish, we should not see up close candles being breached. We enter this long when price trades into a fair value gap after it has already created down close candles as confirmation that it is not going to break. And that's all I have for this video. Thank you so much for watching. Bye.